Well, good morning, everybody. It's 7:30, I see. Welcome to Coffee and Grain Markets with Dr. Lee. My name is Eric Reeker. I'm a field specialist with OSU Extension's Farm Financial Management and Policy Institute. We're so grateful to, one, have Dr. Lee here to break down the markets, but we're also grateful to the Ohio Soybean Council for supporting this quarterly grain market effort. Other sponsors include OSU Extension, Ohio Soy Council, the FFMPI, and the Department of Ag, Environmental and Development Economics. So we'll get started. Glad to have you here today, Dr. Lee. Let's get started with the market update. Can you actually, before I say that, uh, if you have questions, we know there will be people that have some questions. If you want to put your questions in the Q&A feature that's at the bottom of your Zoom screen, that's a good place to put it. If you're comfortable putting it in chat, you can also put it in chat, and I'll try and moderate those questions as we go. We're going to keep our time pretty tight today, and we have 30 minutes with Dr. Lee. Let's get started on the market update. Sinky, can you give us a brief on the new WASDE report that was released this past Monday?
Sure. First of all, good morning, everybody. Thanks for joining us. So without further ado, let's get started. So here's the kind of overview table for the national supply and demand situation for corn and soybean. So maybe like before I start talking about some of the numbers in the table, I want to emphasize the May WASDE report is actually the first report that USDA provides their view for the next marketing year. So basically, this is the first report that USDA shows what they think about the next marketing year, which is 2025-26 marketing year. But before I talk about that, let's just see. So maybe I think for that reason, this is actually good. You can think of this report as maybe what the final likely numbers will look like for this marketing year, and also what the kind of pre-outlook for the next marketing year will be. So when you look at the corn first, marketing year 2024-25, this is maybe the first column that I want to see here. And you can see overall we had pretty solid supply at the beginning of the market year, and actually we were a little bit worried of the overwhelming supply at the beginning of the market year. But since November, USDA started cutting down some of the supply numbers again and again, mainly because of the lowered harvested area, and also the yield was slightly lower than what they anticipated before. So at the end, the total supply ended up being like 16.6 billion bushels, which is still very high, but not as much as what they anticipated, which was above 17 billion bushels. And when you look at the demand side in the blue area, all these numbers are actually pretty solid. So we actually had pretty strong demand in this marketing year, and total demand this marketing year is estimated at 15.2 billion bushels. And I want to especially highlight the export number, which is 2,600 million bushels here. If this is realized, then probably this is going to be the second highest corn export in our history. So we actually had very strong support from the foreign market this marketing year at least. And in total, by given this supply and demand, we ended up having the ending stock of 1.4 billion bushels, which is 1,415 million bushels. And maybe some of you remember what USDA said in last November. And they actually said the ending stock will be above 1.9 billion bushels, which is almost about 100 million bushels larger than what they are saying now. So sometimes you see even USDA makes this kind of significant prediction error. So when we are looking at this number, especially when we move on to the next column, which is 2025-26 marketing year forecast, we have to take a grain of salt all of these numbers. But anyway, given that USDA estimated the finer, not finer, but almost finer season average price for corn is $4.35. And currently, because of this kind of lower than expected ending stock level and relatively good season average price, all this made pretty kind of implying a strong fundamentals in corn. And maybe I think this is why many U.S. farmers decided to plant more corn nowadays, which will affect next marketing year. So when you look at this 2025 marketing year column, I just say you don't have to have a big faith about all of these numbers, but at least I want you to take this area planted pretty seriously, because I think this is at least based on the survey and what USDA monitored, and the planting progress is reflected in this number. So U.S. corn planted area is projected or forecasted at 95.3 million acres, which is about 5 million acres larger than what we had last year. So then, of course, Mother Nature will be a big factor that will affect the market later on. But anyway, if we are not really having a huge weather trouble, then probably we will end up having easily above 17.2 billion bushels, which is a record high supply. Of course, maybe you might feel deja vu, because USDA also actually told the same story last year, but it ended up having much lower than that number as the total supply. So still we have to take this number with a grain of salt, but this number itself is of course pretty overwhelming, and maybe making me a little bit nervous of the future corn fundamentals down the road. And even with pretty optimistic assumption of the demand, USDA kind of ended up forecasting the ending stock for the next marketing year will be 1.8 billion bushels, or maybe 1,800 million bushels, so which is much larger than what we have now. And if that is the case, then probably corn fundamentals at the end of next marketing year will be much weaker than what we are seeing nowadays. So that's the corn situation. And when we just move on to the soybean side, the story is a little bit different. So in the soybean side, we also had started from the large beginning stock this marketing year, which is 342 million bushels. And also on top of that, we had pretty good amount of area planted. And in total, we had good amount of total supply at the end. So 4.2 billion bushel was the total supply that we had this marketing year. And domestic demand was pretty actually strong. So we had a little bit of increase in the crushing compared to last marketing year. So this is 2.4 billion bushel demand happened domestically, and also maybe some other seed and residuals supported as well. But when you look at the exports, which is 1.85 billion bushels, which is a little bit disappointing. Actually, this number is slightly below our 5-year average. So this is not this marketing year, soybean export was not as good as what we had, and mainly because of the Brazil's large soybean production. Brazil had almost record high soybean supply this marketing year, and that really affected a lot our export progress, at least in the second half of this marketing year. So and then at the end, we ended up having 350 million bushels as the ending stock. And this is kind of the reason why nowadays soybean fundamentals are pretty weak. And the season average price is estimated at $9.95 here. And maybe given the situation, I believe many US farmers decided to plant less soybeans, and that is reflected in the 2025-26 marketing year's area planted. As you can see, we almost have 4 million acres down in the area planted for soybeans this next marketing year compared to this marketing year. And if we are assuming all the trend-based yield projection and all the production numbers, then we are likely to have a little bit lower supply in the next marketing year. Then if we are not really having a huge trouble in the domestic demand, and maybe export will be maybe slightly lower than what we had even this marketing year, because Brazil soybean production will anyway be continuously strong. So given that, the total demand will be 4.4 billion bushels, but thanks to the lower total supply, the ending stock will likely be about like 55 million bushels lower than what we are having this marketing year, which will maybe strengthen the soybean fundamentals. And the season average price for the next marketing year soybean is estimated or forecasted at $10.25. So that's pretty quick brief of what USDA WASP report said.
Sinky, these are pretty interesting supply and demand fundamentals, and they're subtly different for corn and soybeans. But appreciate the supply data and then also the export data and that you put together. How do you see this supply and demand affecting our current market fundamentals? What other things might be affecting the market?
Well, I think maybe I think it is good time to think about like how the market fundamental has evolved during the past couple of months. So maybe one good way to like look at how the market fundamental has changed is looking at the maybe end of marketing year futures contracts. Of course, July is not the end for soybeans, but anyway, let's say this like July futures contract is kind of the index for the price projection that futures market had for both corn and soybean commodity values. So when you look at this 2025 July futures contracts since 2024, they used to have like pretty much like kind of they used to show pretty much like good co-movement at least until like last November. So they moved pretty similarly, and then since last November, suddenly they started kind of diverging, and this is actually the point of time that when USDA started uh, adjusting down the corn supply, which kind of strengthened the corn fundamentals. And as you can see, the gap between the soybean and corn price has happened because during this time, soybean fundamental has just remained as it was. So as you can see, the soybean price was in the range between like 10 to like 11, but like mostly like at around like 10.50. So there was some ups and downs, but anyway, that's like where it is. And compared to that, like corn fundamental has like increased a lot because of the lower than expected sort of supply. So sometimes actually we saw like at least for this July futures contract, the corn price has gone up almost close to 520, and then it went down like as we had some other like market uncertainties by the trade, by the South American production, and by some other actually like uncertain factors, which is mainly because of the planting and the new crop coming to the market, all these kind of things. So especially when you look at all like far right end of this chart, uh, corn suddenly like kind of coming down, and you see a little bit of like picking up in the soybean price. These are actually kind of the current reflection of the projected planting pattern that USDA reported. So as market recognize that there will be a huge new crop corn will be coming to the market. So anyway, many like traders just cleared their position and selling it. So selling the corn. So the corn price has gone down like during the past couple of days. And then in the meantime, soybean fundamental has recovered a little bit, not much yet, but a little bit because of there will not as much soybean like new crop soybean will be coming to the market in the next marketing year. So that's how the like at least this old crop has been doing in the market fundamentals, and we can actually do a very similar exercise with the new crop. So this is actually 2026 July futures contracts, and as you can see, they are not as much like dynamic as 2025 July futures because we are not seeing many news directly impacting this July futures contract for the next marketing year. But one thing at least I can see from this chart is the far right end. So as you can see, this is pretty similar to what you have just seen in the 2025 July futures contract. But during the past few days, corn like futures price has gone down, reflecting maybe like large new crop corn coming, like probability is kind of going up, and that is reflected in this chart. But also at the same time, as US, this is actually the WASI day, and right after the WASI day, people realize that there will not be as much soybean, like new crop soybean will be coming to 2026 marketing year. So 2025-26 marketing year. So that really raised the soybean futures price like this, like close to 11. So yesterday, actually, this is the chart from yesterday. So yesterday, interesting thing is the soybean futures price was 11, like 10-month high. So it was pretty high, but like after the market got the news about the biofuel policy discussion, because EPA, there was a news that EPA is kind of having a conversation with the White House for the adjustment of the biofuel policy, which potentially can affect the renewable diesel policy or maybe some support. So currently, that is maybe that can be a good news or bad news at the end, but currently that is just uncertainty. So right after that, market just reacted pretty negatively. So soybean price actually has plummeted right after the news. So that's actually what's happened yesterday. So market fundamentals sometimes reacted. So maybe like from this point, I can emphasize a couple of like maybe curveballs that we have to pay attention to. Maybe one thing is, of course, the tariff and trade policies, but also maybe the modern nature, which will affect the new crop production. And also biofuel policy will anyway affect the domestic demand in the next marketing year. So that's kind of one more thing that we have to pay attention. And lastly, the Brazil production will affect in the next marketing year as well. So these four, I think, wild cards will be anyway the key thing I want to highlight down the road.
Are either of those four curveballs? Do you see one of those as more impactful than the other?
Well, maybe I think the most immediate one will be, or maybe at least maybe which should be more familiar to farmers will be the planting side. So I want to talk actually a little more about the planting situation we had. So let me actually show a very interesting map. This can be actually a punchline for this like today's talk. So this is the estimated corn acre that USDA documented in the latest WASDE report. And you see, like maybe among the top corn producing states, Ohio is the kind of one of the few states colored in red, meaning that most states are expected to plant more corn than last year. And when you look at even Arkansas here, um, this is like the top number is indicating the acreage estimated. So Arkansas farmers are expected to plant about 710 million acres, 710,000 acres to be planted for corn, and this is 42% higher than last year. And when you look at the Ohio farmers are expected to plant about 3.25 million acres, which is 4.4% down from last year. So surprisingly, except for Ohio, all the kind of main Corn Belt states are expected to plant more corn, which will be actually maybe I would say a very courageous move of Ohio farmers. And I don't think this is actually problematic because this is very strategically like good move because when it comes to maybe reevaluation of commodities, we are taking some of the risk that even though current soybean fundamentals are weak, but we are planting more soybeans and like less corn. Uh, but we will see like how market will like reward this kind of risk-taking strategy for Ohio farmers. And when you look at actually the soybean estimated acres, it is actually even more like stark comparison. You see the blue island in the Midwest. So even like in the soybean side, actually Ohio soybean acre is estimated at like 4.1 million acres. And this is actually the record high soybean acreage that we had in Ohio. So and like by contrast, when you look around all other like neighboring states, maybe except for the state of New York, most states are expected to plant less soybeans, mainly because they are worried about the weak fundamentals in soybean and they believe soybean will not pay off well in the next marketing year. So maybe given that maybe next marketing year, soybean will be like much better treated than at least for now. So that's the current situation. And um, maybe for the next couple of months, the key issue for many farmers will be the weather. So I want to share a little bit of how like U.S. farmers are doing and making the planting progress. So when you look at the U.S. corn planting progress, is like not that bad. It is like when you look at the red line, this is slightly faster than like last year and even slightly faster than the 5-year average, but not too fast. So it is kind of moderately good progress in terms of the corn planting nationwide. And when you look at the soybean side, the soybean planting is actually very fast. Even it is kind of hitting the kind of maximum like pace of planting in 2025. So currently we are really like having good progress in terms of soybean planting nationwide. And when you look at the Ohio numbers, this is just Ohio like planting progress. Last year we actually had very fast like planting progress. So compared to that, we are a little bit slower than that. But currently we have a almost 25% completion of corn planting, which is slightly below the 5-year average, but not too bad. And soybean planting actually was fairly good at the beginning, and then now it is kind of getting slowed down. So currently we have 25% completion of soybean planting, which is about 3% faster than what we used to have in terms of the 5-year average. So that's kind of what we have for now.
With regard to corn planting progress, Sinky, Ohio is kind of that island again. Similar to your prospective acreage on both corn and beans, but Ohio is what 25% planted this year, and we're quote unquote behind most of our other corn belt states, whereas on the soybeans we're kind of on pace. So appreciate the discussion on planting progress and acreage report or prospective acreage. What other comments do you have about the demand estimates that you're hearing?
Well, demand estimate, I think it's very tricky. At this point, probably we already have the summary numbers for this marketing year. So I think these numbers are almost like pretty close to the final numbers. So maybe I think that's like what they are. So we had pretty good demand, at least for this marketing year. Then now the big question is what it will be in the next marketing year. And so far, like I don't see a huge red flags like over the horizon. So probably like at least for the domestic demand, will be pretty strong for both corn and soybeans. Maybe the only uncertain part is the biofuel policy discussion. So that's something that I kind of keep an eye on, like this issue. But so far, like, and we will see. But like, I don't think it will be like really destructive change anyway. So the market will be like pretty, I think, solid, and demand will be overall okay. But maybe the big question is the export. So I have actually a couple of slides, and you will like we will like providing this slide like after the show. So
Yes.
uh please feel free to reach out to me if you have any questions. But this is the current like corn export progress. As you can see, the red line is like fairly strong and above even 21, 22 marketing year. So, and this is our like estimate for this marketing year. So as I mentioned before, this is the second highest corn export that we have in our history. And the first like highest one is 2021, the COVID market, which is like about like 2.8 billion bushel exports. But anyway, when you look at the country by country, like most countries, like the top 6 corn buyers are really like doing well. And especially when you look at the EU, they had a little bit of supply issue, and also Black Sea region also had a supply issue, and all this combined, and they ended up buying quite a bit of more corn from the US. So that really, I think, helped our export progress this marketing year. And when you look at the soybean side, as I mentioned, it is pretty slow now. The progress is almost staggered. So we are anticipating almost 1.85 billion bushels as the final number of our soybean export, which is below the 5-year average. And one of the key reasons is actually China. So China kept trying to diversify its supply chain and try to be independent from the US supply in its food supply chain. So that's kind of the one of the main reason why soybean is kind of keep like struggling with export market. And probably when you look at the global production, uh, Brazil's record high soybean production was realized here. This is this marketing year. And next marketing year, Brazil soybean production will be even higher. So given that, I'm actually maybe domestically, I'm not seeing a huge challenge for the soybean side. And probably as many Ohio farmers are planting more soybeans, this might be very like important point. But then the only part that makes me a little bit nervous is the export side. So given this high number from the Brazil, probably the export side is maybe one of the key risk, like in addition to like production and other parts. But anyway, from the export demand side, so we will have to look at this like, and we will see how our export market can do better, like with along with this competition with Brazil. And the other one I want to highlight quickly, want to highlight this table is the corn side. Next marketing year, there will be about 43.7 million metric ton increase in world corn production, and more than half of it is coming from the US. So uh, probably like this is really like making me nervous of the future corn fundamentals in the next marketing year. It's actually better to think about what will be a good strategy to like keep your margin in terms of the corn, at least for the next marketing year. So I would urge many farmers to be prepared for the volatile market and sudden plummet of the prices, and maybe some of the policy uncertainties. So I think all these three things will be basically risk factors, but also at the same time, I think this is good time to think about then what is your feasible risk management tools. And maybe I think we don't have much
But
time left, so like I can go to almost my conclusion page.
yeah, share with us your key takeaways for the farmers who
Yeah,
are listening here in our few minutes, and also want to say to listeners and viewers, if there's questions, throw them in the
yeah,
Q&A. We'll try to
right,
answer them.
yeah.
Go ahead, Sankey, your kind of key takeaways.
One of my key takeaways is the when you look at the, so basically like be mindful of your like risk management tools. So when you look at the storage, because of the low production in Ohio, actually Ohio like grain stocks, both corn and soybean, on farm off farm storage currently is like lower than what we used to have, meaning that probably at least many Ohio farmers will have more space than they used to have in the next marketing year. So probably storage will be one of the good risk managing tools for many Ohio farmers in the next marketing year. So like I kind of recommend considering to use it for your risk managing tools, but also at the same time, this is really good time to think about what other risk managing tools that you can use. Maybe very like classic lesson that I can say is, given this volatile market, you can lock in some of good portion of your, even like before harvest, good portion of your like new crop to be locked in with forward contracts or maybe hatching. So that maybe they are not the highest price that you can get, but at least once you get the like positive margin, if it is reasonably like paying off, then I think I at least like recommend like locking in some portion of your new crops, so that like you can think this kind of not the best price, but kind of reasonable price as the paying some of the cost, reducing the risk. So this risk managing like strategies is needed. And also maybe I also want to like highlight some of the knowledge asset. So given this volatile market, like learning some new tools that you are not currently familiar with, something like futures, options, hatching, hatch to arrive, all these kind of things. I know they are very complex, but once you get it, this knowledge asset can save you like a lot of money, like for the next couple of years or maybe even decades. So this will be pretty valuable investment. So this is not a one-time like investment. So I really want many Ohio farmers to think more about like other risk management tools and broaden their like toolkits, especially given this volatile market.
Well, Sankey, those are good suggestions for our growers to kind of uh, beef up their marketing knowledge and add more tools in their toolbox. You made some good suggestions with regard to storage and knowing your cost of production and knowing when you're making even a little profit margin so that you can lock in a price even though it might not be at the top of the market. It's certainly a year where it may be difficult to find uh, a top in the market like we've been used to. So appreciate your time. I am looking for, okay, sorry, we're going to wrap up because we are at the top of the hour. Before we wrap up and dismiss you, we would ask that you click on the Q&A. Am I doing this right, David? There is a poll that we'll end with today instead of sending out a survey. So if you would please click on that Q&A and answer, I think, 3 short questions. We would greatly appreciate it. We want to thank Sankey. We want to prepare all of you for August 22nd and November 14th. And thank again Ohio Soybean Council for sponsoring Coffee and Grain. Sankey, you got a couple of comments.
Oh yeah, I have just one comment because we got a question like from Wendy about
Oh,
like do you think that some of these countries will be interested in buying more U.S. agricultural goods to offset their trade imbalance? And I think this is really good question. And as I don't have enough time, but anyway, you will see this slide later. So I want to actually highlight one of the slides that I actually made. This is kind of from one of my project with my students. So this is actually the state level export and all these kind of agricultural commodities are listed. So for instance, we like Ohio, we are making about $3 billion of agricultural export, and the color, this oilseed and grain, is meaning that our top export commodity, uh, sold to outside of country. So, and this is actually more specific to the China. So if we just zoom in to the China relationship, we actually have $247 million agricultural exported agricultural product exported last year. So, and if we actually split it down to what's happened in Ohio, we actually have almost like 70% of our export to China was grain and oilseed. So I think this will partially answer like one discussion. Of course, this is not fully and satisfying answer, but but hopefully you will find this information useful. So I actually have all the slides for the uh for 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 the total like world total and China and Mexico-Canada relationship of this version of the map and pie chart, and also our export and our import situation is also made in our in the appendix slides. So please feel free to take a look at it and see how our actually export import relationship is going with other countries, at least for the key trade partners. So I hope that this help like answering some of your part of your question, Wendy.
appreciate good questions, and we appreciate the work, Sinky, you do to be prepared to answer those questions. It's been an informative 30 minutes, and we know it's the start to your day, producers, and we want to give you that time to get started. Perhaps it's planting, perhaps it's waiting to plant, but we appreciate your time here today. Again, join us or join Dr. Lee again, August 22nd and November 14th. We wish you the best in finishing your planting season, and we pray for a productive year for you. Have a great day.
Thank you, everybody.